everybody, and thanks again for joining us today. For those of you who don't know me, my name is Amy Delore and I'm the Policy and Public Affairs Manager with the Hunter Business Chamber. I'm just stepping in for Bob in the MC role today as he's otherwise occupied. While this event is being delivered across multiple lounge rooms, offices and other locations across the region, I do acknowledge that the Hunter Business Chamber operates on the lands of the traditional lands of the Awabakal and Worimi people, and I would like to pay respects to elders past and present and future knowledge holders. I'd also like to extend a warm welcome to any Indigenous people who are with us today. I'd like to thank Dr. Anthea Bill, the lead economist for the Hunter Research Foundation and our guest speaker for today, for stepping in at very short notice. We had a sudden cancellation yesterday from Damien Tudor-Hope, the Minister for Small Business and Finance, due to an unscheduled parliamentary sitting today that he was unable to get out of. So Anthea has agreed to join us today. Mr. Tudor-Hope will now join us on Friday next week. That's May 22 at 11 a.m. You should have received an email about that with a new registration link for that event. It's also on our website under the events tab, and we'll be promoting it on social media during the week with the link to join if you'd like to do that. But it's quite a bonus to have Dr. Bill here today. Any of you who have seen her presentations for the Hunter Research Foundation Centre Economic Breakfast will know that she's an absolute font of knowledge on economic and trends and matters in this region. So as somebody who has her finger on the economic pulse of the region, we'll be very interested to hear from her on what she sees as some of the impacts of COVID in our area and possible pathways to recovery. So welcome to you, Anthea, and thanks for joining us today.
Thank you, Amy. It's a pleasure.
Okay, our audience will be muted today to avoid any background noises. You're welcome to keep your screens on if you'd like to do that. And I think it's nice sometimes to see who else is in the meeting, as it were. I would ask if you're multitasking, if you're taking a call, if you've got to move around, just to flick your screen off so you're not distracting anybody else. And I'm sure you all have plenty of questions for Anthea, so please use the live chat function to shoot them through to us. We've only got half an hour today, so don't be shy. Keep those questions coming. Anthea, I wonder if you might be able to begin by giving us a little bit of an overview of what the economic data to date is telling us about how Hunter businesses are faring through COVID-19.
Yeah, sure. Happy to do that, Amy. At the moment, we're relying on publicly available data from the Foundation. We haven't run our pulse, so we run a survey of 300 Hunter businesses and 300 Hunter households every 6 months. So we're waiting for June to run that survey. But what we do have is some national data. And so one of the key national pieces of national data that we're relying on is the unemployment data. At the moment, the data came through for March. That was at the end of last month for the region and halfway through last month for the nation. And what that showed was not much of a change because it missed, because of the period when the data is collected, it missed some of the important impacts that have happened really from March 22nd. But we do have some other data sources, and I'll just jump, hope you don't mind having a look through some graphs again this morning. It's my sort of usual fallback, and I do love talking to the data. So I'm just going to try and share my screen to show you some of the national data that we've got. Sorry. And I'll share my screen. Here we go. So we can have a look at some of the data that's been coming out. And we do have some data we wouldn't normally have at the moment to think about what's been happening nationally and in the region. And so the data set, a new data set, a novel data set that we have is from a partnership between the ATO and the ABS. And so they've partnered around the single touch payroll, which came in last year, and a data set that's being released from that. And so that's a really unique data set, and it's a very timely data set. So it's really just a couple of weeks from what's happening. So we've got data to the 18th of April from the 14th of March there. And this is the data that the Treasurer and the Prime Minister were talking to last week when they were talking about some of the impacts of the COVID pandemic on the Australian economy. What we can see when we look at that data is that there's been really substantial losses in jobs, which won't surprise anybody in this webinar. 7.5% drop in employment between the 14th of March and the 18th of April. To put that in context in terms of the kinds of trends that normally happen in the labour market and the hunter labour market, last year we saw jobs grow by 4% in the hunter, and that's actually substantially above the state growth, which was 1.5%. So we're looking, when we're talking about a jobs loss of 7.5% over such a short period, a month, we're talking about almost a year and a half worth of jobs growth lost in the hunter and Australian economy, if we can take this to the hunter. The impact on wages was also really substantial, so 8.2% drop in wages. And so just to put that in context again, wages grew by about 2%. Last year. So if we look at the year to December, wages grew by 2%. So we're looking at, 4 years of wage growth lost in a month. And in fact, if we look at when those changes happened, most of those changes actually happened just in a single week, which is where this line starts to get a lot sharper and the gradient gets a lot steeper in terms of the fall, which is on between the 28th of March and the 4th of April, which was when the restrictions really tightened. So not only did we have gyms, pubs, clubs closing, we had cafes having to do home delivery, we had restrictions around people going out, so that tightening of the stage 2 lockdown coming through. And so in that period, 5.5% of jobs were lost. So most of that job loss occurred, most of that wage loss occurred, about 5% of that wage loss occurred. The data also, this one-touch payroll data is also able to be seen broken down by industry. And so this is again between the 14th of March and the 18th of April, and we can see the impacts by industry. And so as we know, it's not an even impact across all industries. Accommodation and food services, 33% of jobs lost, so 1 in 3 jobs lost there. Arts and recreation also really heavily impacted. But in terms of the impacts across the other industries, they're reasonably broad-based. You would not expect to be seeing job losses in most of these industries at this quantum at any point in any economic cycle that we've seen for the last couple of generations. So this is just an incredible economic trend. We know what it's been driven by. We know that it's been driven by, extreme health crisis presented by this incredibly infectious disease and by the social distancing measures that have been introduced. So the impacts appear to be fairly broad-based. Retail, 6.8%, a little bit less than we might have been expecting. And when we have a look at retail, we can see that there are parts of retail that have been growing. So in terms of spending on food, supermarket spending, things like household goods, home improvements, pet care's gone up, online gambling's gone up as well, and other parts of more discretionary expenditure, so gyms, cafes, things like that have been going down there in retail. So some broad-based impacts there. And what we can see, if I move my little thumbnail across, if we have a look on the right-hand side there, we can see the split in employment for the hunter. So this is the most recent data that's available at the industry level within the hunter. And so what we can see there is just how much employment's tied up in retail trade and in accommodation and food services. So about 27,000 jobs there tied up. It's if we have a look at, the split across industries, in the most recent industry data, we can see, about 18% of the labour market's in healthcare and social assistance. That's our biggest employer. Then construction at 11%. Then retail trade and accommodation and food services. Arts and rec is a relatively small share. Arts and recreation is a relatively small share of the hunter labour market. But, these are really big industries that are being impacted in employment terms. Another thing that the one-touch payroll data gives us is it can give us a breakdown by age, and so we can see the impacts across age groups. And so, again, the impacts across age groups haven't been particularly even. So, and not surprisingly, because we know that there's a very high share of young people employed, for instance, in food and accommodation. And so we have a look at the census, the 2016 census, we can see about 2 out of 3 jobs in the region. So about 60% of jobs in the region in food and accommodation go to people under the age of 30. So we have a look at the age distribution in food and accommodation. About 2/3 of those people are under the age of 30. And that's actually higher than the national split. So we've got more young people working in food and accommodation in the hunter than the distribution nationally. So we have a look here, we can see that around 20% of people under the age of 20 have lost work over the period between the 14th of March to the 18th of April. So that's 1 in 5, around 12% there, so about 1 in 8 of 20 to 29-year-olds have lost work. Really quite staggering, quite a high rate of people aged 70 plus losing work over that period. One thing to keep in mind with the one-touch payroll in terms of thinking about how it's going to flow through to official unemployment rates is that it's a measure of jobs lost. So it's a jobs-based measure of unemployment, not necessarily a people-based measure of unemployment. So if somebody has 2 jobs, they might not be unemployed, even as a result of losing one of those jobs, and that will show up in this data set. And what that means is when the official unemployment rate comes out on Thursday, so it's coming out tomorrow, the April data for the labour market, and so that's the one we've really got our eyes on because we know it will pick up some of these impacts. If we took this data directly across, we'd be seeing about 1 million people out of work, and we know there are about 1 million people on job seekers, so the Prime Minister revealed that last week. But we're not expecting to see exactly 1 million come through into the labour market data. If exactly these figures came through, we'd see the unemployment rate double, so we'd see it go from about 4.5% to 10%. It's predicted to be coming through at about 7 to 10%, so we'll have to wait tomorrow to see where the unemployment rate moves, but really substantial labour market impacts already from this COVID-19 crisis. So what we also have is some regional data. So this is from Business New South Wales, and so they've taken the industry data from One Touch Payroll, so there's industry trends, and they've said, given what we know about the industry split in each of these regions, what do we predict will have happened in terms of job losses? And so what Business New South Wales predicted is that there'd be 20,000 people who've lost their job within the Hunter, so that includes Newcastle, Lake Macquarie and the rest of the Hunter. And this is a split between the two, between the Hunter Valley excluding Newcastle and Newcastle and Lake Macquarie. So we can see the ranking there in terms of the percentage job losses. And the Hunter Valley excluding Newcastle ranking higher than Newcastle and Lake Macquarie, which is kind of down the bottom in the second, at least in the bottom half of the distribution across the state. We can see where Sydney's sitting nearly at the top there in terms of the impacts. It's not surprising given Sydney's reliance on the hospitality sector and tourism. So just speaking to this graph, which is entitled Employee Falls in Employment, and it shows the distribution across the state in terms of the regions impacted. So really, the Hunter Valley, excluding Newcastle, impacted more severely than Newcastle and Lake Macquarie, and Newcastle and Lake Macquarie sitting down the bottom half of the distribution, but still really sizable impacts across the state. Sydney at the top there, close to the top at 6.2%. So, so more dramatic impacts for Sydney, Newcastle, Lake Macquarie sitting down the bottom half of the distribution there. And so this is an estimate, so it's assuming that the impacts across the state fit the impacts that have happened at the industry level. So it's just assuming that the industry level impacts for Australia have occurred at the regional level. We don't know whether they have. We won't see that until the data comes out at the end of this month. Another data set that we have courtesy of the Business Chamber, thank you Amy and thank you Bob, is this data that's been collected from a special survey that...
Not getting it.
Okay. Is it coming through now? Yeah, so I think it doesn't like it on the slideshow view. So maybe it likes it off the slideshow. So if you're seeing it now, it might be because it hasn't been, I've gone out of the slideshow view. So New South Wales Business Conditions survey conducted by the Business Chamber. It's looking at the changes for New South Wales businesses surveyed the 16th and the 27th of March, and it's asking to what extent is your revenue below where you would expect it to be. And so this is a really great data set. For a long time, it was the only data that we had. So thank you very much to the New South Wales Business Chamber before the ABS came through with this ATO partnership. It was the only data that we really had that was very timely within the region. And so what we can see there is the Hunter Valley excluding Newcastle right at the top of the state there in terms of the cumulative revenue impact. So the proportion of businesses reporting that their revenue was below where they expected it to be. And that's a combination not just of the COVID impacts, which are the black line, but also the bushfires and the droughts. So in our region, in Hunter, excluding Newcastle and Lake Macquarie, we've had more severe impacts than other parts of the state because of those cumulative impacts. Newcastle and Lake Macquarie sitting right down at the bottom of the distribution there, so in the bottom half of the distribution. And yeah, so some really important data for understanding some of the impacts, but this data only goes to the 27th of March, so it's not picking up those April impacts that have come through in the other data set. So in any data we look at, any data that's reported, we've got to be really careful that it's completely up to date because the impacts are changing so dramatically week by week. This is the NAB Business Survey, which is Australia's biggest business survey. It came out just yesterday, and it was showing some really dramatic impacts in March, particularly in terms of the impact on business confidence, which is the red line there. So what we saw, and you can just see just how dramatic those impacts are when we have a look at the time series going back to 2010. So the read for business confidence has bounced back in April, but we're still looking at an impact where it's, many fold below even the lowest impact over the entire series. So it goes back to the early 1990s recession and the impacts from the coronavirus, from the COVID-19 pandemic are manyfold, double below the business confidence reading, the lowest business confidence reading in the entire series. So it's threefold below previously, now it's only double below. Business conditions, as expected, have deteriorated in the survey for April. So business conditions are a measure of how businesses are trading right now in terms of their profitability, hiring, trading, and business confidence measure is a forward-looking measure. So it's looking out, sort of 12 months in terms of that profitability, trading and hiring. The NAB sort of commentary is that they're expecting to see some ongoing impacts coming out of this. The results are fairly broad-based across a number of industries. They're expecting, some impacts, ongoing impacts in terms of unemployment. So really highlighting that when we're looking at impacts of this magnitude, we're not looking at something that's necessarily going to resolve itself in a very short period of time. This is data on capacity utilisation by industry, and we can see again the split across industries, the national data, and we can see, recreation and personal services, the capacity utilisation sitting well below its average since 1997. Impacts in retail, wholesale trade, mining, from the most recently available data. There are, however, some data sets that I think are worth highlighting on the upside, on a positive note. And I think when we say a positive note, we've still got to keep in mind that, when we're looking at even 10%, 20% drop in economic, in some of these figures from the normal figures, that's still a really bad outcome for the economy. I mean, we really don't want to see anything like a 10% drop in GDP in the Australian economy coming out of this. That would be, something that we haven't seen for many generations. But what this data set, which is a data set that the ABS collects looking at household finances due to the COVID-19 outbreak, what we can see there is they've asked households across Australia to report in terms of, have their household finances improved, have their household finances worsened, have their household finances remained the same since the outbreak of COVID. And they've broken it down by 18 to 64-year-olds, so the younger age group, and 65 and over. And so what we can see is that, if we add the figures up, about 80% of households, so 18 and 61 of 80% of households, they're reporting that their household finances have either remained the same or improved. The figure is worse, however, for people aged 18 to 64, so about 33%, 1 in 3 are reporting that their household finances have actually worsened due to the COVID-19 outbreak. So, but still, we could say as a statement, as a majority of households are reporting that their household finances have either improved or remained the same. post-COVID-19 outbreak. It's just really this 30% for the 18 to 64-year-olds and 20% for those aged 65 and over that we've got to worry about in terms of household spending. I guess one thing this survey doesn't tell us is how bad the impacts have been. These groups that have worsened, whose household finances have worsened over that period. So just moving down to have a look at this. This is also a unique data set that's available, only become recently available with the COVID-19 pandemic. And it's a data set that's a partnership between Ilion and Alpha Beta, and what it's actually providing is real-time tracking of Australian consumer spending over the COVID, since the outbreak of COVID. So we can go back to January here in the city, right through to only really a week ago. In a week or 2 weeks ago. So really, really real-time data, much more data. It's 250,000 Australian consumers, so 250,000 credit card holders, so really big data. We wouldn't normally see data that's this recent released publicly. It's data that might sit with banks or other financial institutions, but through this partnership it's become publicly available. It's really interesting data because it's telling us about essential and discretionary spending. So the top line is essential spending. Australian households, the bottom line is discretionary spending. So spending on things like clothing, household goods, eating out, some of those things that aren't considered, the essential part of the household expenditure bill, which is mainly, food, electricity, those kinds of things. And so what we can see is that when these lockdown measures start to come in, they start to tighten around the 22nd of March, really sharp drops, particularly in discretionary expenditure. When the stimulus came through, it actually served to moderate some of the impacts in terms of those impacts on households. And then we saw some deterioration. This data, which just came out on Monday, is showing an uptick. So it's showing a rebound in household spending just coming from the 20th of the 4th there. So that's really, really good to see that, because that's more recent data than the ABS payroll data. And Alpha Beta commenting that that's probably likely due to the doubling of the unemployment benefit and youth allowance and some of the easing of the lockdown restrictions. So that's some really good news for Australian households, and really good news potentially for Australian businesses if it flows through into retail spending. And so what we saw at the lowest point there, we were looking at discretionary spending sitting about 30% below normal. It's now sitting about 20% below normal. If we have a look at total spending, it's now only sitting about 7% below normal levels, whereas before we were, even a week or so prior, we were looking at levels that were 20% below normal. So really sharp movement upwards there. Let's hope we can see that come through into some other data that's available domestically and through into the labour market as well. Thanks, Amy. That's all from me in terms of data.
Thank you very much for that, Anthea. Interesting to see that uptick in consumer spending there. And I guess with the easing of restrictions, there is a bit of optimism around. But also at the same time, we've got experts warning that the real impacts, economic impacts, aren't going to be seen for some time. In fact, the Treasurer even yesterday, warned of a dire June quarter. What are the factors that are going to cause that kind of lag in the economic results?
Well, I think there's a number of things that could come into play in terms of the June quarter results. So one of the basic, economic principles is, a flow on or a multiplier. So when you see job losses in immediately impacted industries, these job losses can flow through into other industries through the supply chain and through wages in workers' pockets. So lower wages in workers' pockets, lower wages in businesses, lower flows of income for businesses will mean supply chains get impacted and that consumer spending gets impacted. And that's when you start to see more concentrated immediate job losses in certain industries flow out to have broader impacts. Some of the other things are what's going to happen in terms of the world environment. So in terms of world trade, these impacts are intensifying overseas as well. So, and having a whole lot of economies sinking down together. So having those impacts occurring across a number of countries all at the same time is really bad news economically. Definitely, that's not what you want to see when you're looking at the world economy, to see, you know, broad-based trends across a number of countries. And I think that's probably one of the worst things with this, related to this pandemic, is it's flowing out across the world everywhere at the same time. I mean, China looks like it's stabilising, but I think having a look at some of the commentary around China in terms of, you know, stabilising its health impacts, it's still not seeing consumers coming back and consumers spending. And so I think some of the June quarter results are also down to confidence and some of the impacts on confidence. And then, of course, we've got the whole other question about what happens in September if some of the supports and wage subsidies start to get wound back, if the kind of honeymoon period around repayments of mortgages, you know, if creditors start calling in debts, you know, that's a whole other wave of uncertainty. And even just the uncertainty itself is giving rise to adverse economic outcomes.
Yeah, I guess, and we could see through that household spending graph that you showed earlier too, that those JobKeeper payments are probably keeping, you know, household incomes artificially high at the moment. So, you know, there will be some real impacts flowing through there. I understand that from, you know, past pandemics and disasters, they suggest a number of possible recovery trajectories. Can you outline what some of those might be?
Yeah, so there's been a lot of debate economically and just in, you know, the general media around what pattern the economic recovery will take. And so some of the, when we have a look at past crises, some of the recovery patterns can be described in different letters, different shapes. One's a V, so it's a very sharp movement downwards, and then the trough is relatively short and there's a quick rebound. So sharp movement downwards, the economy recalibrates, confidence comes back, the engine starts firing again, and you have a recovery. If you have a look at the IMF projections, International Monetary Fund's projections for Australia, they projected a pretty much a V shape for Australia. So they're saying there'll be a 6.7% decline in economic growth, and this over this year, so in 2020, and then in 2021 we'll start to see a rebound of about the same size, about 6.1%. There's a lot of sort of scepticism, I think, coming through that would be the case. And I think the IMF, when they came up with those projections, based on the concept that a lot of the restrictions, a lot of the lockdown period would be gone in the second half of the year. So by June, some of those restrictions would be eased. We are seeing some restrictions eased in Australia, and we're really at the forefront of the easing of those restrictions if you look across the world, particularly in Europe and the US. But, you know, whether we'll be back fully in business as usual, and how consumers will respond and businesses will respond to the easing of those restrictions, whether it's going to be staggered, you know, it's going to be a process. So it is a process winding back those restrictions, and we're still very much reliant on the course that this disease takes and public health advice as well, which is not something economists have a lead in understanding either.
Obviously, we have less of the disease in the community, so, you know, that in some ways that makes it easier to have a return to work process. But I'm just wondering, how do we fare economically against other countries in the world, and do things like the fact that we had low unemployment, had a bit of a budget surplus going into this, have they provided a bit of a buffer for Australia?
Yeah, I mean, certainly having an unemployment rate at 4.5% in our region and having relatively strong growth is a great thing regionally going into this. If we have a look at some of the sectors that have been driving that growth, I mean, construction's been a big part of the employment growth story in the Hunter, particularly coming out of the mining investment boom. And so, you know, and construction's been continuing over this period as well. So it hasn't been a sector that's been a freeze has been put on it in terms of its operation. I think one of the risks is that there could be some movement in confidence around the housing sector and construction sector, and we know that it was starting to soften in terms of its activity at the beginning of the year and the end of last year coming into this. So I think that's a key sector to watch nationally and within the region. In terms of where we're faring, if you have a look at internationally, if you have a look at the IMF projections, I mean, even though our health impacts look like they're going to be a lot less, or hopefully a lot less, than in a number of countries overseas, and that we've made some relatively good and smart decisions in terms of how we've managed the unfolding of this crisis and this pandemic in Australia. If you have a look at the IMF projections, they're actually a little bit worse in the US. Not all places in Europe. I mean, France and I think Germany's projections are lower in terms of, sharper in terms of the fall in their GDP. I think that comes down to how synced in we are as a nation because of our exports to the world economy. So that's one thing we've got to watch. The other thing that's really critical in Australia is is migration and skilled migration. So if we have a look at what's been driving economic growth, a large part of that has been skilled migration from overseas. In the Hunter, we haven't had as much of that as Sydney and Melbourne. So most of those international and skilled migrants have been going to Sydney and Melbourne, not to the Hunter. So our local growth story is not so dependent on those people flows, but certainly any decrease in those people flows is going to flow through to substantially reduce population growth in Australia, which is part of an economic story. So population growth, productivity, participation are kind of the three ingredients of economic growth.
Right, well, you've probably answered a question there we had from Matthew Chantry about the impact of the drop in migration on bounce back next year. We've also got a question here on whether you have any thoughts about restrictions being eased by region or sub-region. Now, quite apart from that philosophical argument of whether we should be all in or not, economically, would there be the challenge in sort of having restrictions eased in at different paces in different areas?
Yeah, I think this is really not really within the realm of economists to some degree. I think it sits really within the advice provided by epidemiologists and public health officials. I mean, my own sort of opinion is that to the extent that I guess we can get some parts of the economy moving and it's safe to do so, perhaps we should. And so that may have differential impacts on certain industries as opposed to certain other industries. And we've already seen that. I mean, we already know that the lockdown restrictions have had different impacts across industries. That's already been the case. I mean, perhaps those regions that are forced to hold back longer because of public health considerations need more support. But certainly I think if certain parts of Australia or states in Australia can get moving and it's okay to do so, then we probably should be supporting that, because that's, we know how much money is being lost in the Australian economy week by week by these restrictions. So to the extent we can ease certain industries or certain places, I think that's probably fair, and we should, and sensible economic advice to be doing so.
Okay, look, we're getting near to the end of time, but I'm just wondering, there's a lot of talk about work practices that have changed as a result of the pandemic, becoming more broadly adopted, I guess, post-COVID. So things like, working from home, Zoom meetings rather than face-to-face, that sort of thing. What sort of, economic impacts would you see from these sorts of workplace arrangements becoming more permanent?
Well, I think potentially, and this is sort of just speculating, but I think potentially in our region there could be some really good impacts from more remote working or more long distance working. It's something we've been thinking about at the Hunter Research Foundation Centre, which is to the extent that because we've got such wonderful lifestyle factors on offer in the region, we might be able to have more workers living here, spending money here, but potentially linking into other workplaces that are headquartered in Sydney. So some of those advanced service sector jobs, professional jobs, growing that link to Sydney that way. So if there is a dramatic shift to remote working and working from home, I think that regions outside of capital cities could really benefit from that. And I think already in the US, some cities have really targeted themselves as fantastic places to set up a base for remote workers, and provided a whole lot of information on making remote working easy to do for those professionals that want to do it.
Well, now that we've all got our backgrounds Zoom friendly and we've worked out how to use the technology, it'd be a shame to waste all that effort, wouldn't it?
Yeah, absolutely.
Unfortunately, that's all we have time for today. I'd like to thank Anthea for being our guest speaker and ask you all to give her a virtual round of applause. We have some more events next week. If you'd like to join us, we have 2 events next week, because we do have the Damien Tudor Hope one rescheduled. So we'll have Mark Fitzgibbon, the CEO of NAB, as scheduled on Wednesday at 11 a.m. And we also now have the Minister for Small Business and Finance, Damien Tudor Hope, on Friday at 11 a.m. So please join us for both of those. Thank you again for joining us. Feedback is always welcome. So if you'd like to contact us at the Chamber, if you've got any ideas for speakers you'd like to hear from, or any way that we can make these webinars more effective. Thank you for attendance today, and thank you to Anthea for your insights. We'll see you again next week.